traders from across the globe, and welcome to the 1116th edition of Short-Term Trading Live with Oscar Carboni. Welcome, welcome, welcome. Good evening, traders. This video, the 1116th video, is being filmed on December 17th for Trading Wednesday, December 18th for Trading Wednesday, December 18th, 2013. Now, this video is likely going to finish out the week. This will be the video I will probably end the week with. We'll see where the market goes. Before we get into it, remember, futures trading can be extremely risky and cause substantial financial loss. Futures trading is not suitable for all trading accounts. All right, traders, so what's happening on the 18th, Wednesday, this December? Well, FOMC or Fed Day, the Fed makes its decision today on interest rates. Traders, interest rates, they're not going to be touched. Here's what has to happen, really. The Fed is moving, right? They're shifting their chairman, right? Bernanke out, Yellen in. Bernanke is leaving. This is his last meeting, his last public meeting. Why on earth would he do anything with interest rates or policy on his way out the door? If he did, that would literally be an insult to Yellen on her way in. What if Yellen has ideas of keeping QE a little longer, of waiting till the federally mandated 6.5% unemployment rate comes? Because Bernanke has said hundreds of times in the last 4 years he will not stop this until the unemployment rate reaches 6.5%. So if she wants to keep it that way, if that's what's going to happen, and it is actually mandated that the Fed has to do this until then, I say no shot at a taper tomorrow. No shot, no way at all. The charts, they don't look like a taper's coming because we've got some really strange things. We've got bear flags all over U.S. indices charts, and some of them aren't quite bear flags. They're like these weird diamond formations, but bearish signals, bearish OMNI for U.S. indices. And then we have the bond charts, traders. The bond charts, I have a chart that I call the masterpiece. This bond chart I'm going to show you in this chart segment is quite the masterpiece, and you need to see it. Traders, with no further ado, let's go look at some charts.
I've been a member of Oscar and OMNI for 6 years, and I wish that I would have come to camp 6 years ago. The reason I came to the OMNI Trade Academy after 6 years was I was skeptical at first because I have spent a lot of money on other seminars, and I mean over $30,000 in useless information. So I was very hesitant, 6 years hesitant.
It is so simple to learn, it is almost eerie. And usually the best things are the simplest things, and that's what Oscar has developed here with this OMNI.
On the first day I said, that's it? So simple? Oscar is the perfect guy. Since you met him, a light on your head turns on. So on the first day of OMNI Camp, your life starts changing.
If cost is an issue with you guys, you should really get that out of your head, because the wealth of information you get from this guy is just unbelievable. So based on that, you got to get to OMNI Camp. Any chance you get, go.
This is the place to come. If you ever get a chance to come to OMNI Camp, seriously, you come.
Traders, bear flags are a-flying. Look at this thing. The Dow Transportation Average, one bear flag, then we have the breakdown day, leads to a second bear flag. And look what happened as of Tuesday. Tomorrow is Fed Day. That looks a lot like that. The next day was this bar right here. Bam. So I'm not saying that has to happen, but bear flags usually produce downward moves. That's a bear flag. It produced a downward move. This is a bear flag. I'd suspect a downward move. I could care less about the Fed. I could care less what comes out tomorrow. I'm a pure analyst. I'm using a chart. The chart says that's a bearish formation, and that is what I'm reporting to you. Let's move on. Traders, it gets interesting. Another bear flag, Dow Jones Industrial Average. But not only is it a bear flag, look at this channel. It's been in the bottom to the top, to the bottom to the top, to the bottom to the top, in the fashion of hitting the top and a bear flag. Interesting. Fed day tomorrow. That's got to be bearish for now. I mean, technically it's bearish. We'll see what happens. Then we've got this Nasdaq daily bar chart. Look at how interesting this flag is. You've got a 2-day flagpole and basically a diamond formation attaching itself to the flagpole. Now that should be bearish as well, but that's a bit of a coin toss. I'm going to put the downward arrow on it, but a little bit strange. We'll just call it a bear flag for now. We'll see how that one pans out. Even greater, a much more defined one here in the emini S&P daily bar chart. Very, very interesting flag. 2 solid down days, you know, that make up the pole, and then look at that flag. I mean, wow. You have to call that bearish, right? We'll see where it ends up. But these don't show up very often. Very, very rare that you get a diamond at the end of a flagpole. Very interesting. Traders, then there are T-bonds. The T-bonds tell us this. No matter what happens short term in the S&P and the Dow, bonds are going lower, rates are going higher next year, and the S&P will likely skyrocket due to that. But we'll get to that next year. Here's what we got up close. Fed day tomorrow, right? Or today, I should say. This video is being filmed tonight for tomorrow, which will be Wednesday. Fed day today. Daily bond chart. Left shoulder, head, right shoulder. Here's a head and shoulders, which should produce a down move. So whatever the Fed says, they're probably not going to say anything bullish for bonds. But the masterpiece of the evening, traders. This bond chart is my masterpiece. You have seen it before. Just take a look at this wonderful chart. This bond chart is a weekly bond chart. It goes all the way back to 2009 here. And what you will notice, further back from 2009, the pattern's the same, by the way, but this is what fits on the chart. 18 weeks, and that's what this means is this. The bond chart hovered around the 200 ball moving average for 18 weeks and then had a massive rally. Came all the way back down, hung out around the 200 ball moving average for exactly 18 weeks, had a massive rally for 2 years, came all the way back down to the 200 ball moving average. It took a year, it took 2 years, comes back to the 200 ball moving average. This time we are a full 26 weeks below the 200 ball moving average. Bonds are 26 weeks now below or around the 200 ball moving average. If it were a bull market, you would not break the 200 ball moving average. It is a bear market, and 26 weeks, I mean, that's a lot. That's now, we're looking at 8 weeks past the average time you spend under the 200 ball or hovering around the 200 ball moving average. That is long-term bearish for bonds, no matter how you look at it. Traders, pull your own charts, do your own homework, take a look at those flags, and look at this bond chart. So, traders, you've seen the charts. Remember, red Omni for the Fed day. We'll see what that means. There are bear flags all over the U.S. indices. And do not forget that chart, that masterpiece chart, the bond chart. Traders, if you would like to learn how to read these charts the way I read them, I can teach that craft to you at OmniCamp. You just saw that little commercial for OmniCamp. If you'd like to join me for a 4-day training session held here in Las Vegas called OmniCamp, I'm holding one the last weekend in February 2014. That's February 21st through 24th. If you would like to have yourself qualified for that OmniCamp, come on down to livewithoscar.com. Click the OmniCamp banner and fill out your applications. I'll see you at livewithoscar.com. Traders, remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stop or in. Emotions are Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.